Assalamu alaikum and welcome to this, the first of the Oasis Focus and Finance shows for 2019. And may the upcoming year for you be healthy and wealthy. Without doubt, 2018 was an interesting year. We have a new president, we've had cabinet changes, we see a pushback against corruption, and of course an outlook into an election for this year. Somebody who's going to help us understand something of what happened last year and also what could be happening this year is the CEO of Oasis, Ebrahim. Adam, assalamu alaikum and welcome to the Oasis Focus and Finance show.
Wa alaikum salam, Shafiq, and it's wonderful to be the beginning of 2019. Inshallah, may it be a wonderful year for all of us.
Amen to that. Now, if you look at 2018, there was kind of a couple of trends. We had Trump, we had Brexit, we had trade reforms, and of course the shadow of China. How is this going to affect our outlooks globally and locally for 2019?
So if you look at 2018, we almost had a perfect storm. Globally, we had a number of factors that have changed the world economy and the world political system that has been around for about 30 to 40 years. In fact, many of them have been around since the end of World War II. And so when you have these big changes, and 2018 was the year where some of those changes were implemented, it's been spoken about, it tends to unsettle financial markets. It tends to create an environment, because it creates an environment of uncertainty where fear comes in, and rumor rules the day rather than intellect and fact. So, the Trump tweets and the Trump actions with not a lot of substance behind it and sometimes pure fibbing can move financial markets, can move public opinion, can destroy economies. Now, that's not right. You need facts. Secondly, the global trade war culminated, which was we could anticipate for 20 years, and we prepared for 20 years, and we spoke about 20 years. When you do something like that, it has to happen in a bilateral rather than a unilateral way. And in 2018, we went the unilateral way of resolving a very complex issue. It's not just straightforward as the tweet suggests. And there's gainers and losers, and you need a bilateral, and in fact you need a multilateral approach to resolving this. And that's been the approach over 20. It takes a bit longer, but you then get a solution that is less painful, that is well thought through, and where the unintended consequences are fewer. So we've had to deal with that, and that again creates uncertainty and allows for rumor mongering. And then we go into something like Brexit, again a change in a 30, 40-year dynamic. And obviously it was a more marginal decision, 50-50. And so now when you look at all the pain related to Brexit, and we all knew that the pain would be there, because when you put structures in place that have been in place for so long, you get the efficiencies, the norms, individuals and corporates and organizations adapt to that. Now, when you change that, you've got to change all of that. So that creates further uncertainty. And then the changeover in South Africa, great changeover from the kind of kleptocracy that we had with the new president coming in and starting to address for the first part of governance, the second part. So when you address governance, when you have commissions of inquiry, the skeletons come out,
rattling,
and they're skeletons of the past. You have to realize that where you are in ESCOM, the road accident fund, in not a pretty position, and you've got to deal with it. That again creates uncertainty and creates an environment of fear. So you take through all of that, and surprise, surprise, you had incredibly volatile financial markets through the end of 2018. and the currency markets have been, just every market has been very volatile. And that creates great opportunities for people like ourselves.
What do you say about global growth conditions for the upcoming year against the background of everything that you've said, this so-called climate of uncertainty, which of course does also offer opportunity?
So we have to deal with those factors. So the global economic growth is quite robust, 3.5, 3.6, 3.7%. Mm-hmm. When you consider our growth of 0 to 1%, global growth is fantastic. And there are many, many countries with 5 and 6% growth. That is slowing by 1 or 2 or 0.1, 0.2, 0.3% through 2019 as all of those factors come in. Why we don't believe that it will be a rapid drop down in economic growth is because, firstly, that US fiscal tax stimulus is still playing its way through. Secondly, countries like China are starting to react. They are starting to reform on the margin, and they're starting to stimulate their economies. That will cushion the impact, some of the impact of the trade wars. We're right in the eye of the Brexit storm. So it's no longer years for resolution. It's months, it's weeks, it's days. In fact, today we get a vote on whether the Prime Minister of the UK Prime Minister's proposals accepted, and it's all likely that it will be defeated, and that then puts a time frame for resolution. So we're in kind of that resolution phase. And then, in South Africa, we've basically run an economy to please the rating agencies rather than our citizens, mm-hmm. and rather than what's in the best interest of our country. And that's because we had a kleptocracy. However, with the changing government, and especially when the election comes later this year, we've already seen the positive signs, improvement in governance, commissions of inquiry, people held accountable, people being fired, etc. What that means is South Africa, maybe through the latter part of 2019, could be run for its citizens and the best interest and the best health of the economy, rather than being held to ransom by the rating agencies. So you could see economic growth pick up. So with all this cloud and all this noise, there are some, remember, mankind doesn't stand still. Mm-hmm. There's some very bright people out there. There's some very entrepreneurial people out there, and some very hardworking people out there. So you're always going to get the wave of negativity, which fuels those people, and ultimately those people overcome the fearmongers, and this creates a wonderful opportunity to focus on the facts, and knowing full well there are issues, but focus on the facts, focus on what has been done to remedy. And I think 2019 will be a slower year, but not a disastrous year.
You've just mentioned that Brexit is coming to a head. And of course, in Europe, we're going to be seeing some elections in some European countries. So how is this going to play into the scenario that you are sketching?
The scenario we're sketching is a less free world. Mm-hmm. Where there's less goods and services traded, there's less free movement of people. The barriers are going up. Mm-hmm. Now, we lived through this in the 70s and 80s, the 60s and 70s, and we survived.
The Iron Wall.
We won't go back to the Iron Wall. We won't go back to those restrictions, mm-hmm. but we must probably get somewhere halfway between. Now, why do we have that? Why do we have Brexit? Why do we have populism? Because that movement of bringing in nearly 1 billion people into the workforce impacted on Manchester manufacturing, impacted on the Pittsburgh steel mill, and it impacted on the Vanderbijlpark steel mill, mm-hmm. right? Those were replaced by Chinese and Indian and Indonesian and other countries who were more efficient, more productive, and we didn't retool those economies, those domestic economies that were displaced, and we didn't reskill those people. And it's those people that are kind of saying we want barriers up. So there will be more barriers. The German election is a very important one, because in a strange way, Germany has actually benefited very hugely from the movement of people. They've pulled in people from Europe and Iran. You know, they've pulled in Syrian refugees, highly skilled Syrian refugees. It's allowed the economy to continue to grow. They pulled in skills that they didn't have. That lowered the cost of operations. And when you have all of this political change and you have the Rust Belt people, I just saw, Pittsburgh's very interesting because Pittsburgh is the Rust Belt of America, the coal mines, etc. The coal mines are a thing of the past. You can't save it. So that was one of the Trump, populist support. And yet the coal mines are closing because they're replaced by alternatives. And those alternatives are more efficient. So those elections will create change, but we've seen will create certainty. And when there's certainty, we'll know what the playing fields are, and we will adapt. Those entrepreneurial, hardworking people, governments, etc., in 10 years' time, we will be living in a new normal.
Adam, to get back to you. This year, South Africa, elections, we think it's in May, haven't had a date yet. But how do you think the South African elections are going to play into the big question, investment, capital letters?
So firstly, the changeover from leadership of the ANC and therefore leadership of the country that happened in 2018 was very material, because what it did was it started the process of changing the faces, removing some of the really bad faces who've been at the heart of corruption. So that's good. Secondly, and that's been a process, and some people say too slow, but remember that the election of the president was a 50-50 and the NEC was a 50-50 situation. So you can't act very boldly when it's a 50-50 situation. You've got to be astute. You've got to be, you've got to have a plan. And I'm actually encouraged that the president does have a plan. So he's addressed the governance issues. But the first part of a reform process, and remember when we chatted, we said that's the first part of the reform, has gone out and encouraged investors. I went to the investor conference that the president held, so well attended, so much enthusiasm, and we just need to continue along that. When the election happens, and the list of the ANC when it comes out finally, what you will see is even fewer names that have a bad reputation. And when you go into the elections, that means Parliament and the NEC will have fewer people with bad reputations. There'll be more people with great reputations. And so the governing function of Parliament will ensure that we have laws and regulations that encourages reform. And we will have reform. We're in a situation where there's no option but reform. And so I'm encouraged that we have a leader who is really astute. And we must give President Ramaphosa all our support, because he is the man. There's only problem is that I cannot see anybody else. If something has to happen, he has to fall ill or something like that, I cannot see somebody else with the same stature and astuteness.
The gravitas.
Yes, to be able to do what needs to be done. And we mustn't run, the leader mustn't run too fast. He's just got to be, and he's got to lead, do things that is needed to be done, rather than things that we want short term. And so I think the elections will be very dramatic, will lead to boosting confidence. The two things. If we no longer manage the economy for rating agencies, we can reduce interest rates by 2-3% like that.
Mm-hmm.
Now that boosts the economy. With the reforms that will happen, it will make it easier to do business, lower the cost of doing business. So investment will happen naturally. Besides the big push for investment, now the country's been starved of investment over the last 5-7 years. That change will have a dramatic effect. So what we have to do now is we have to encourage all South Africans to go and vote. We've got to encourage all South Africans to support the current process. And the outcome will be that those hardworking entrepreneurs, those inspirational leaders, and those hardworking South Africans, we will get this economy back into the 3-4%. That creates jobs. And that is the environment. So this is the catch-22 for all of us. Mm. If we're negative and if we're pessimistic, it has a direct effect on your wealth. Because low growth, pessimistic environments means low real growth in wealth. Mm-hmm. If you're positive and you work hard and you're entrepreneurial and you have a government that governs the country, you get economic growth, you get wealth growth, and all of us will benefit, and it will make this country fairer. It will make this country easy. So we actually at the tipping point of moving from a scenario of, I would say, middle of 2017, extreme pessimism, to where we are today at the dawn, and I've spoken about it, it's a long dawn, mm-hmm. At the dawn of a very, very, very bright future.
Now, the material reforms you've spoken about, the prospect of better governance, and of course also a focus upon our infrastructure as well. How do you see this affecting growth, not in the short term, but the medium to the long term?
So I think growth is bottomed. The immediate reforms means that things like tourism, visas are improving for work, so you get the odd person coming into the country. That it's not completely liberalized yet, but we've just started. That means we will have more technical skills in the economy. Lower interest rates, rising investment. We've already seen the confidence in the rand. That's supported by the lower oil price, means in December and January, we got very big reductions in the fuel price. That feeds directly into people's pockets. So the issue is everybody's been so pessimistic. So there's been no investment. The shops and the factories have very little stock. There's been very little building. But we come back to the new year, and suddenly we've got two very, very, very big initiatives which could be concluded in the next month, 2 months, 3 months for our land and airport city. Mm-hmm. You know, so it looks as if all what we're talking about, the people, the entrepreneurs who are ahead of the curve are making those decisions, and that means more people get employed. And so it's a self-fulfilling, like we've had a cyclical, spiral down for the last 5 to 7 years. The spring up, because the resources are there, the people are there, the energy is there, the financial wherewithal is there, mm-hmm. To get this economy really buzzing. So on a 3-4 year view, I do not believe that anything from 3 to 5% is outside our reach. So more positively, mm-hmm. we can attain with the energy that we have, as long as we ensure that we will never, ever elect corrupt officials again. That is and it's in our control.
If we look at the situation, you've spoken about confidence. Now, what is all of this going to mean for, let's say, the average business person, maybe the SMMEs or somebody watching us who is not head of a major corporation or something like that?
So there's two things. I'll start with the negative first. The big negative about this world trade issue is that the Chinese, if they're not exporting to America, they're going to find markets to export to. So the thing is, do a lot of those goods land up on our shores, replacing South African workers, replacing South African business? That's the question for South Africa. Our borders are porous. Now, again, with the new government, we're more likely to firm up the borders. If we had the situation that we had in 2017, then I would say we would be in a bad situation because, people, there's both legal and illegal imports, and those things would have flooded in. Legal imports could flood in. Illegal imports with the new president and hopefully that will be stopped. But that's most probably, for me, that's the big concern. For the SMME, suddenly you're going to find, right, there's new gardening services needed because there's new buildings. With more water, there's going to be more gardening services. Just take the impact of all the gardens that are going to have to be fixed if we have a good rainfall season, because then the dams will be full. Wherever you look, all the grass needs to be replaced. Most of the plants need to be. I'm just using an example.
Well, even infrastructural development and Clanwilliam Dam, raising the dam wall, increasing capacity.
Yeah. So all of these things have. So as a person in business, remember, big business never started as a big business. Every business starts as a small business. So if you work hard, you're entrepreneurial, you find your niche, and you are competitive, you'll do very well in any circumstance. And as the economy recovers, you'll do exceptionally well. So my advice to every South African and every businessman, no matter how large or small, and every investor, be confident, go and do your job to the best of your ability. Be entrepreneurial, get the best product, service your customers really well, and we will be on a road to 3 to 5% within 3 years.
I'm into that. And Adam, in the final minute, your strategy through all of this.
So we basically have our portfolios are well diversified. So we have different asset classes in our balance funds, and we encourage people to invest in the 3 balance funds because it's the best suited for the individual and the wealth management needs. And so equities provide long-term growth and inflation protection. People are very pessimistic about equities because they're down and they're never going to come up again. That's what the rumor mongers. And so people are fearful. So the danger is that they're fearful and take money from equities into cash. And then when the economy picks up, inflation picks up, the cash does very poorly and equities do brilliantly. Secondly, we've got property and we've got income products. We then have our investments are not only domestic South Africa, but global. And we are invested and we have cash available to invest. So if opportunities comes, the one thing that we just, because of fear, a lot of people have taken money globally out of financial markets and they've sold, and people like ourselves have bought things that have done 50%. Great companies that are down 50%. The companies themselves are buying back buckets full of their own shares. So when confidence comes back, and those people, that money that's been taken and been put into cash, comes back into the market, just that dynamic could see the market up 20, 30%. So we believe having the right balance fund, staying fully invested, being confident that you've chosen the right, and concentrate not on your wealth, but concentrate on making your business better, concentrate on looking after your family, and concentrate on looking after yourself and enjoying life, and let us concentrate on your long-term wealth. And we get lots of people every day they phone, how much What's the price? What's the price? How much am I worth? Every day.
Mm-hmm.
So the emotions does this. It's crazy.
Mm.
You know, they should just relax, forget about it. If they've put the money from a long-term perspective, you're only going to need the money when you retire.
Mm-hmm.
You've got to make sure you have enough and you retire at the right age. Otherwise, you're not going to retire very happy. You may retire very ill because you're so worried because of this money, and the money may actually become a burden. The message that I would like to tell all investors: let your wealth be an enabler. Let your wealth be a source of joy that allows you to do what you need to do for yourself, your community, and to society at large. Never let it be a burden.
Adam, shukran for that, and have a good year.
Thank you so much, Shafiq. Thank you. You too.
And that concludes today's edition of the Oasis Focus and Finance Show. A special thanks to our guest, Mr. Adam Ebrahim, CEO of the Oasis Group. Tune into the show next week. Should you wish to watch this or any of our other shows, you can log into the Oasis Crescent YouTube channel, or you can also log into LinkedIn on the Oasis Crescent page. Should you wish to contact us, you can email info@oasiscrescent.com, or you can call 0860 100 786. Until next time, I'm your host, Shafiq Morton. Assalamu alaikum wa rahmatullah.